this is a very beautiful thing, right? So that's a base right there, absolutely accurate base. And then what he did is he basically put layer. So that's the first layer, second layer, third layer, fourth and fifth. Okay. Now I don't know if they have calculated 7% or not, but from the base, what we have to do is we have to wait for the 7% first. Okay. And then after 7%, we will put our first buy layer. Okay. So in this case, of course, they can remove the first layer. Okay, and they can start buying from the second layer itself. That will be very safe in that case, of course. Okay, but yeah, this is a very proper way of doing base breaking strategy. That's a very good way of doing it. Okay, so very good whoever did it. I don't know who did it, but yeah. So yeah, very good actually. So in the previous class, we discussed about base breaking strategy, right? This is the strategy that we discussed. Okay, we discussed what is a base, we discussed what is a panic, how to buy in panic, what percent we should wait for, how to exit from the market, okay, how to make our layers, right? It depends on person to person, of course, okay, but how to use different types of layers, okay, this one. Also, we discussed how we can convert our profit into a little bit more. So let's say, yeah, okay. Great. If you have calculated it's minus 7%, then absolutely correct. Okay, nailed it. So yeah, so then we discussed about, of course, how we can convert our profit into a little bit more. So how we can, let's say if we make 30% profit, then how can we convert that 30% profit into 50%? Okay, by holding it for a long term and sell at a higher price. Okay, that we discussed. Now, one more thing I want to tell you about base breaking strategy, and it's a very simple one, which I forgot to mention yesterday. So we have to wait for the panic. Okay. Now, what is panic and how does it look like? So it will look something like this. Okay. And this will look. So this is panic, right? This direct drop is a panic. Now, another way of doing it something like this. So this is the correct way of doing, okay? First and foremost, this is the correct way of doing. The incorrect way of doing is this one, which I'm going to explain, of course. Okay. So let's say if the market drops, let's say the market drops, and even after the base, it drops like this. Okay, so even after the base, if the market drops like this, then this is not a panic. Okay, this is what we call slow death. It's a slow death. Okay, what we need is a panic, a proper panic. Okay, and this is what a panic looks like, something like this. Okay, this is not a panic. This is a slow death or slow bleeding, whatever you can say. Okay, but remember, this is what we have to do. This is the correct one and this is the incorrect one. Okay, great. So I hope everyone understood what a base breaking strategy is. It's a very great strategy for any kind of beginner player. Okay, for example, in today's case, if we try to draw, yeah, so say let's say this is a base, right? On chain link, it's a very good base actually. That's a base and that's a very good base. Okay, so what I have to do is I will start putting my layers around 12, then maybe around 11, then maybe around 10, right? Maybe around 9. So if I see a drop, then of course maybe 3 or 4 of my order will get executed and the market will move up, correct? And then I will just sell all of my coins around 12 or $13, sorry. Okay, and of course I will calculate the average and that will be my profit. So in this case the profit will be around 25%, let's say. Okay, so this is how we do it. Okay, now let's move to the next topic, which is Fibonacci sequence. In the previous class, I did mention about Fibonacci. So Fibonacci is a number which is present in the universe. Okay, it is present almost everywhere. It is present in flowers. It is present in painting. It is present in atoms or galaxies, right? So it's everywhere in our universe, right? So Because of that, a person thought that, okay, if it's everywhere in the universe, then maybe it's also in our psychology. And based on Fibonacci, they created tool. Okay, there are two tools. On the left hand side in TradingView, if you go, the third option, it says Gyan and Fibonacci tool. GANN and Fibonacci tools. Okay. Now, Gyan is something very different. You might find it interesting. Of course, I can share some details about it. It is something different. Okay? But Fibonacci is basically these two tools. Okay, Fibonacci retracement and trend-based Fibonacci extension. Retracement and extension. Okay, you might find some videos regarding Fibonacci on YouTube. There are people who use Fibonacci in an extensively way. I mean, okay, they generally use it just Fibonacci always. Okay, so it's a great tool to start with. It's a good one. But you always use Fibonacci with something else. Now that something else is what? It can be support, or it can be resistance, or it can be a trend line. Okay? But use Fibonacci with anything also, like something else. Okay? Now let's go to our part. So the first one is Fibonacci extension. Fibonacci extension. Okay. Now remember these points. I'm just going to read it. The main aim of using the Fibonacci extension is to find the take profit zone. Okay. For why do we use Fibonacci extension? To find out a take profit zone. Okay. Remember this part. In uptrend, we go from low to high and then retracement or pullback. Okay. So there are 3 points that we have to connect. 3 different points we have to connect. In an uptrend, we go from low to high and then to retracement. Okay. In downtrend, we go from high to low and then retracement or pullback. Just the opposite of it. Okay, nothing to be worried about. Remember, in Fibonacci extension, we connect 3 points. So we try to connect 3 points. Okay, 0.61, 1, and actually 0.5. Okay, there is some mistake in this one, of course. 0.5, 0.61, and 1 is a good point to exit from the market. Good point to take profit zones. Okay. Now let me elaborate. Okay. Fibonacci retracement. Fibonacci retracement. Okay. Now in this one, of course, what we have to do is, let's say the market is moving in the upper direction, something like this. Okay. Then we have to connect 3 dots. So point A, point B, and this is going to be our point C. Okay. And when we connect these 3 dots, so you see A and B is very simple to find out. Point A and B is very simple to find out. Once the market starts moving up, if the market turns, then that's a B. Okay. How do you find the C point? Is basically wait for the market to make a U-turn. Okay. Now one more thing. This C point is going to be between A and B. Okay. The third point can't be low, can't get lower than A. So it can't be like kind of like this. So this is the incorrect one. It can't be like this. Okay. The C has to be between A and B. Okay. This C point, it has to be between A and B. It can't be on points B also. So it can't be something like this. Something like this. I mean, A and C can't be at the same level. That is also incorrect. It has to be between A and B. So don't make that kind of mistake. Okay. Now, once you put the tool from point A, B, and C, then what you will get? You will get few lines. So you will get a line like this one, something like this. Maybe in the middle you will get. Maybe right here you will get. Maybe right here you will get. Yeah. Right here. So these are the different points from 0 to 1. These are different points. Okay. And some of them are more useful. Some of them are less useful. That, of course, we will discuss. But this is what a Fibonacci retracement look like in a bull market, or when the market moves in the upper direction. Okay. Now, what happens when the market moves in the downward direction? Very simple. So you connect the top to the bottom and then to the retracement. Point C. Okay. So that's our point A, point B, and point C. Point C is when after the market takes a U-turn. That is point C. Okay. Remember this. And of course, you will get some this kind of situation. You will get different lines, and some of them are good. I mean, they are more useful, and some of them are less useful. Generally, in Fibonacci retracement, 0.61, 0.5, and 1. These three are more useful. These three are more useful. Okay. Generally, in Fibonacci, again, Fibonacci retracement is, we use Fibonacci retracement to find out take profit zones. Okay. Oh, sorry, Fibonacci extension. I misspelled the name. No one corrected me. Okay, no worries. Fibonacci extension, guys, not retracement. Extension. Okay. So in Fibonacci extension, we try to find out take profit zone. Okay, this is our goal, to find out take profit zone. Okay, and this is the important numbers. Okay, this is for bull market. And this is for bear market. Okay, now let's go on a real chart and let's see how to use it. Okay, that's great. Let's go on Bitcoin. One second, it's taking more time. Okay. So this is Bitcoin chart. Okay, on the left hand side, there is a third option. From there, we have to use trend-based Fibonacci extension. Okay, the second option. Okay, so now what I'm going to do is I'm going to touch this lower part. Okay, connect the lower part, then the upper part, top, and then the retracement. Okay, now the third point, you see, I can also draw it right here, or also I can extend a little bit in the future. It's the same reason. The line won't change. This line, they will never change. Okay, they will always be at the same place. See, they're almost at the same place. Okay, so of course I can just extend it just to see what can happen in the future. Okay, so for example, if I have entered right here, hypothetically, then for me, the good area to exit is 0.5. This one, see, 0.5, this line. And of course, after that, the second area is going to be 0.618. This area is also a good one to exit. And then after that, one point is also, see, this is one. So this is also a good one to exit. Okay, so these 3 points are good one to exit. And if you might be following few signals groups, right? Few signals groups. So what they do is they tell you take profit zones, right? So this can be your TP1, take profit 1. This can be your take profit 2. This can be your take profit 3, right? So by using Fibonacci extension, you can try to find zones or price where you can exit. Okay. Now, how to use this particular thing is like this. This is going to be a little bit not complex. Just learn it. It will be simple actually. Okay. So for example, this is the chart. Okay. Point A, point B, and point C. You use the Fibonacci extension, and this is it's telling you. It's telling you to exit. So this is your TP1 around 0.5. Then this is your TP2 0.61, and this is your 1, this is TP3, it's around 1, correct? Now, how can you use all of it? It's very simple. You wait for the market to move up first. So as the market moves up, if it goes to TP01, then what you will do? You will put a stop loss. Where you are going to put a stop loss? You're going to put a stop loss just below the TP1, right around here. Okay. Now from this point, two things can happen. The market can move up or the market can move down. If the market goes down, no worries. We have already our stop loss ready. So whatever profit we have made in this area, whatever profit we have made, we have already booked it. Okay, by putting a stop loss. So that is one case. Okay. What if the market continues to move up and goes to TP2? Then what you will do? You will remove this stop loss and then you will put a new stop loss just below TP2, right around. Okay. Now the market is around TP2. Okay. Now here also two things can happen. The market can continue to move up or the market can drop. If it drops, then again our profit is already secured because we have already put our stop loss. And if it moves up, great, we have a TP3 then. Okay. Once we touch TP3, maybe if you have a take profit zone 4 or 5, then you have to do the same logic again and again. Okay. It is a little bit time taking, but with this kind of a strategy, you can always make sure you end up in profit. Okay. This is a very good thing. So this is how you're going to use Fibonacci extension to find out take profit zones. Okay. Also, as I said, we always use Fibonacci extension with something else. Now, what is that something else? It can be resistance, can be support, that is your something else. So for example, in this case, if I see at 0.5, there is also a resistance. Okay, at 0.5, there is also a resistance, this one. So of course, there is a 0.5, there is a resistance also. So maybe there is a chance, there's a good chance that you might book your profit. It's a great, see, if you enter right here, this is like what, 25% profit. 25% profit within 4 or 5 days. That's a good amount of profit as a swing trader. Okay. Now, the second thing is, of course, see this one point. This one point is overlapping with this particular resistance. That is also a very good area to exit. And of course, if you look at the graph, the financial, or you can say the bankers, the big players, why they exited at the top? Because of the Fibonacci, of course, also with the help of the support and resistance game. That's why they exited, all of them, right around here. Okay. So this is, you're going to use Fibonacci extension. If you guys have any question during the class, please drop it in the chat. Okay. And I will take it in the last. But yeah. So, but this is how you use Fibonacci extension in the bull market. Now in the bear market, same logic. So for example, the market went down, it moved up, and then again it goes down. Okay. So in that case, what you can do, again, Fibonacci extension, top, bottom, retracement. Great. Now you see 0.5 is there first and foremost. Okay. At 0.5, it is overlapping with this particular support level. See, that's a great zone to exit. Overlapping with the support zone. For example, you have taken a short position right around here. Okay. So where is your exit point? Boom. This is your exit point. First exit point. Second exit point, 0.618. Okay. Third exit point is 1. But the market did not touch the 1, right? So of course, you can book at around 0.1 or let it run and just keep on decreasing your stop loss in this case, of course. So keep on decreasing your stop loss. And whenever the market takes a U-turn, you will book your profit and you will exit. Okay, that's a very good way. Now, for example, if you take this kind of trade, how much profit you will make? Minimum 30%. Of course, there are more days, but in the bear market, the market does move slowly. Okay? But yeah, that's a short method. Now, one more thing. This part. let's see. I mean, I am not used Fibonacci on this one, but let's see. So what I'm going to do is I'm going to find out a exit point. So this is my bottom, this is my top, okay, and that's my extension. Okay. Now, if you have bought Bitcoin around 25,000, the best point to exit is, see this one, 0.5, then 0.615, and then 1. Okay. And let's see if they're overlapping with anything or not. So this is overlapping with this one. So 0.615 is overlapping. Okay. 0.5 is not that much good, but 0.615 is overlapping. Okay. And then there is a 1 also. And let's see if we can find out more. So there is 1.61. Let's see this one. 0.7. 786 is not that important. 0.1. Maybe we can put no, let's just put 0.1. Okay, 0.16 is this one. Almost, we're almost there. Almost there. Okay, that is also a good way. But see, this happens when you are taking a position trade, when you are playing with lots and lots of money. Okay, this is not a swing trading then. If you are using 1.6 for exit, that is not a swing trading. That is a position trading then. Okay? Because that's a very big wait period. That's a wait period for like what, 5-6 months. It's insane. And the percentage is also insane, of course. But that's a very large time period. Okay? And that's why we generally use 0.5, 0.618, and 1. That's it. Okay? You can put more numbers if you want. Okay, you can create more numbers. It's up to you. Okay, by clicking on this one. Okay. I only use few. So let's say 0.5, 0.618, 0.382, and 1. This is more important for me. That's why I'm just putting this. Okay. So this is Fibonacci extension for you guys. Try to use it on different charts. Let's see if we can find out something or not. Let's see. ETC went up. ETC went crazily up. No, nothing in this one. Okay, let's see. So let's count this as a bottom, this as a top, okay, and this as a retracement. Let's see if we can find something or not. Okay, so 0.618, that's a good area to exit because the resistance is also overlapping with the number. 1 is a good point, and let's put 1.6, and let's see if it helps. 1.6 is way behind right now. It's very at the very top. It did not touch 1.6. But yeah, you can clearly see these are the areas where we can exit 0.5, 0.618, and 1. Okay. One more thing, Fibonacci is not always accurate. Again, I am telling you, Fibonacci extension or Fibonacci retracement, they are not always accurate. And that's why you have to use it with something else, okay, to increase the probability. Remember in the second or third class, maybe I told you how to think as a trader. Okay, you think in terms of probability and risk. You try to increase the probability of your success and you try to decrease the chances of your failure. Okay, so by using that logic, whenever you are using Fibonacci, use it with a support and resistance or with a trend line. Okay, great. Let's move ahead. Now the second thing, okay, I think we have some examples. Let's see some examples. They are almost same, I believe, which I showed you. Yeah, see this one. So you can take around one profit, like around 1 point, around 0.5 is also good, around 618 is also good. But yeah, this is one example. The second example is this one. So moved up, then a correction. Okay, then you can book your profit around 0.5, 0.618, and 1. 1 and 1.6 is also there. But for 1.6, you have to wait. How do you use FE with the trend lines? Wait a minute, let me show you. So let's say Let's say this is your market. It's moving like this. Okay. Now, if you are analyzing the market, how you are going to analyze it? For example, there may be some trend line involved like this, something like this in the future. Okay. And if you are putting your trend line, for example, this one, so A, B, C, and then you have few things like the market moves something like this, for example. Okay. And you have lines like this. Okay. Now, if you create a trend line right around here, then you will find out that, okay, there is a resistance point. Okay. Then you can see, okay, if there is a resistance point and the market is taking a U-turn from this particular point, then you might feel as an exit point. Okay. It won't say that, okay, you have to properly exit here, but you will feel, for example, if there is a overlapping between the lines and some kind of a trend line as a resistance, or maybe also as a support, then that intersection is also telling you to exit. Okay. This in case when the market is moving like this. Okay. And this one when the market is moving in the downward direction. Okay. Let me find you a example, proper example, so it will make more sense. Yeah, for example, this one, see, if I use a extension right around here, for example, this one, let's take this one as an example. You can see, this one, and if I draw a trend line, something like this, okay, you can see it is telling me it's this point, okay, 0.5. Okay, we can see there is a trend line, and of course something is there, so we can overlap with this one. Okay, it's not the accurate way, but always try to draw something else with that. Okay. Let's try to find out something more. If I don't find any example right now, of course I will send it to you. Okay, I can't see anything making proper sense with the trend line itself, but of course I will send it to you, no worries. But with support it's very clear. Okay, I think with support it's clear. With the trend line I will send you a few examples, maybe today or maybe tomorrow. But yeah, then the next point is Fibonacci retracement. Now, how do we use Fibonacci retracement? Fibonacci retracement is used to find out a, can you guess how or why do we use Fibonacci retracement? For Fibonacci extension, we use it to find out exit point. Now tell me why, I mean, if you can think about it, why we are going to use Fibonacci retracement? Anyone? We have around 11 people. Stop loss? No, not for a stop loss. For entry position. Okay, we use Fibonacci retracement to find out the entry position. Okay, Fibonacci retracement. Now, Fibonacci retracement is useful to find potential support and resistance zone. Okay, but basically entry positions also. Okay, with entry position, we try to overlap support and resistance, and then we use that particular area to take a position. Okay, in uptrend, we go from low to high. Very simple. In downtrend, we go from high to low. Okay. Remember, in Fibonacci retracement, we connect 2 points. Again, very simple. Okay. 0.5 and 0.61 are the important zones. That's it. Okay. Nothing complicated. 1 second. Yeah. Still, let's take the same zone again. Okay. Now, as I am saying, believe me, Fibonacci extension retracement, they're not always accurate. And that's why we have to use it with support and resistance and with trend line. Just 1 second, guys. I have to take a call. Okay. Yeah. So in this one, of course, what we have to do is we have to just figure out a lower point and a higher point. So something like this. Let me just write Fibonacci retracement. We use it to find out entry position. Entry position. In this one, 0.5, 0.61, and sometimes 0.32 is also important. Sometimes. Okay. It happens when the market is majorly bullish or majorly bearish. Then sometimes 0.32 does work. Okay. In that one, what we do is basically we try to find out a lower point and a higher. That's it. Okay. Point A and point B. And all the different lines will be between it. Something like this. Okay. There will be 0 right here, I think, and 1 will be right here, I think. Okay. And the numbers will be in this one. In bearish one, how can we do it? Same. Something like this. Then we connect the top with the bottom. A, B. Okay. And the points will be between it. Something like this. Here the market is bearish, the market is moving in the downward direction. Here the market is bullish, the market is moving in the upward direction. Okay. Now let's put our Fibonacci retracement from point A to point B. That's it. Done. Okay. So 1 is below, 0 is at the top. Okay. See, the right way of doing is this one. But of course, you can extend this line and there will be no difference. This horizontal line will be always at the same point. So in this one, you can clearly see. Okay. This 0.5 level is the accurate one. Okay. Also, you can overlap with the previous resistance level. Okay. The market took a U-turn from the top. Where it rests around 0.5 level. Okay, from here it takes a U-turn again and then it moves up. So here what you have find out is that okay, 0.5 is an important level and the market did touch it. So then you can take your entry position based on this one. Of course, support and resistance is always there, but based on this one is also important. Then if you want to take a short position, let's say the market is top right here, bottom is right here, and this is the retracement. Okay. So from top to bottom, that's it. From here to here. Now, as I mentioned, sometimes when the market is major bearish, then 0.382 is also important. See this part? Okay. And this area is overlapping with the resistance. See? I think I wrote 0.32 here. It's 0.382. 0.382. Yeah. So you can clearly see 0.382, 0.5, and 0.61. These three numbers are important in the case of retracement. Okay. Now we can do one more thing. Let's try to find out the entry position for Bitcoin. Okay, from bottom to top. Okay. And let's see if we can find out something or not. So in this case, this is the bottom, this is the top, and let's say the market is going to take a U-turn. Okay, it has not taken a U-turn still, but let's say hypothetically the market is going to take a U-turn. Okay, then at what price you should enter? For me, I can see 0.328. Why? Because see, this support level is overlapping with 328. That is the one area. Okay. The second thing I can see is 0.5 actually. It is not overlapping. It is overlapping with this resistance, and this resistance is small resistance, and this support level, I think. Let's try to draw. Yep, it's very close actually. It's very close. I don't think, but maybe. So these two zones, around 35,000, 36,000, which is around 0.382, and below that is 0.5. These two areas are very good to take a position for in the case of Bitcoin. Okay. Now, generally, when you are looking at this much large chart, which is basically from the November to May, so let's say that's a more than a year. So in this case, what you do is you take a position trade. Okay, so that means you are going to purchase. If Bitcoin goes down, then you are going to purchase maybe. 1 second, where is the? Yeah, so maybe you will purchase something right here. Okay. And then you will purchase maybe more right here. But these two zones are very good for a long-term investment, for a long-term position holding. Okay, so maybe the market might go down, something like this. And then it will go. Okay, who knows? So you will buy something, some Bitcoins in your position at this point, and some Bitcoin at position at this point. Okay, so this is how you can use Fibonacci retracement to find out entry positions. Okay, any question regarding this two? Fibonacci extension and Fibonacci retracement. Do you have any question? And one more thing, I don't think you are going to use it, these two tools again and again. Okay, but sometimes you are going to use it. Sometimes. Maybe when you are in doubt when to enter, if you can't find a support properly or a resistance properly, okay, then you might use this one. Okay, but not on every trade. This is not a proper trading strategy fully. Okay, this is just to help you out. If you can't figure out any kind of position, for example, you have been analyzing the market from 1 week or 2 weeks, and still you can't find any kind of position, then you can use this kind of tools. Okay, to find some areas where you can buy, to find some areas where you can sell. But this is not a foolproof trading strategy. Okay, it's just a tool. Now let's try this one. Let's see. For example, if I want to take a short position, now you see from point A properly to this one. Okay, the market went up, and you see where it touched around 0.618. That looks like a very good area to take a short position. Then in this case, we have to take a short position right here. Okay, and you can clearly see the market did went down from that point. But it's not a foolproof again. So this is a good area to take a short position. But then again, 0.5 was also a good area to take short position. See, from 0.5 also the market went down, and then again it moved up. So automatically it will hit your stop loss if you have taken a short position right here. If you have taken a short position, any kind of short position right here, you might have already hit your stop loss, okay, and took a loss of 2% or 3%, something like that. But yeah, any question regarding Fibonacci extension or retracement? Okay. Or anything, whatever we have discussed till now, any question regarding that? Because the next one is important indicators, which is RSI. So RSI will take some time. Okay. Then we have what? we have RSI, MACD, stochastic RSI, volume, pattern trading. So we have 4 topics. Each will take at least one classes maybe. Okay, pattern trading will take more time, of course. We have to discuss more regarding pattern trading. Okay. Fibonacci extension and retracement. Do some homework on this part. Okay, try to analyze few charts. Watch some videos on YouTube maybe. That will also give you some insight about it. Okay. Yeah. Any question, guys? Any question related to Fibonacci extension and retracement? The whole market dumped. Why? Because we have a resistance. We have touched our resistance. Okay, that's a very big week, a very big negative week. Okay, and it's going to close actually because within 10 minutes this week is going to close. So I think it will be negative only. And why it's happening? Because around $48,000 we have a great resistance. See this one? A very great resistance. Okay, this resistance was around 29th March 2022 and it is playing well, I believe. If this gets broken, then the next stop is going to be around $52,000. But I hope the market should go down actually because it has been moving up from a very long time. It has been moving up. Okay. So it has been moving up from like what? From here, which is 11 September. From 11 September to today, let's say 11th Jan. That's like 122 days. 122 days. So from last 122 days, the market was bullish. Okay, that's a very big time frame. I hope it goes down. I do hope at least to 35,000. If it goes down to 35,000, that's a very good area to start investing again. And if it goes down to 30,000, that's a very great area to invest. I mean, I don't think it will go below 30,000. Okay, but these are the 2 areas which I hope the market goes down to those levels. And if the BTC goes down, then absolutely every other coin will start moving down. Okay. So the ETF thing. So what about the ETF thing? See, I think I have mentioned this part that whatever information or whatever news that you get, the chart always includes all the news itself. So if ETA gets approved, maybe because of that also the market might go down. If it gets disapproved, maybe because of that the market might go down. Okay, I am not worried about the ETF thing because the chart always calculates all the news in itself. So I am just doing the technical analysis. That's okay. Because let me show you why I am telling you this. If I go on Bitstamp, in bull market, negative news doesn't affect the market, or even the positive news also doesn't affect the market. Okay. You guys were not there about Bitcoin, but somewhere right around here, I'm forgetting, it was this or this area, something like this. In this area or maybe in this area, if I'm correct. I was trading, okay, and China banned Bitcoin right around here, or I think here. Okay, so you see, China, I mean, they have a huge source of income. It's a $15 trillion economy. Okay, if they ban Bitcoin, that's a negative news. That's a very negative news, right? But what happened next? The market quickly recovered within a month. Let's say even this is a news, then the market recovered within 36 days, just over a month, and it boomed. It went up. And if you take this as a negative news of China, because I'm forgetting which one was there, so that's just 13 days, and then market again moved up. So even a negative news in a bull market doesn't make any sense. Okay. The market, the sentiment, if the sentiment is positive, everything is going to move. If the sentiment is negative, everything is going to go down. And even the positive news, if you tell me the positive news in the bear market, the market will go down. Doesn't matter whatever you say in this whole thing. Okay. So that ETF news, I don't care about it, to be honest. I am just going to go into technical things. That is more important for me. I always say is that whatever information we are getting from the market is old. It's already included in the chart, always. Until unless it's a very uh, quick news or very new news. Let's say if there is a scam or something got hacked, then of course the market will react to it. Okay, because that's a very black swan movement. Yeah. Any other question, guys? And of course, I will send you examples of Fibonacci extension or retracement with trend lines. I don't have it right now, and I can't see anything at this point. But if I find something, then of course I will send it to you. Any question, guys? But do watch some videos regarding Fibonacci extension and retracement. How do we choose one? See, for me, it's very simple. What I do is generally, whenever I want to add any coin in my list, I read about the coin. I read about the project. That's it. If I like the project, then it's in my list. If I don't like the project, then it's not in my list. I mean, of course, you can see I don't have a Dodge here, but yeah, Dodge is also here. Okay. Now, Dodge is, of course, it's not a great project, but it's a community based coin. Community believes in it, and that's why it's in my list. But yeah, but every other coin, if you see in my list, they have a proper project behind it. They are working on it. They have a community behind it, and that's what I need. And they're solving a particular kind of problem, and that's all I need. But the easiest way to choose a coin for trading is just read about the coin, read about the project. If you think the project is good, then add it into your chart. If you think the project is not good, then don't add it. That's it. Okay. Try to add coins who are in top 100 at least, in top 100 on coin market cap. Okay. So that is always better. Any other question, guys? Okay, great. If you don't have any question, then no worries, of course. Oh, the market went down. That's actually good. I mean, actually, I'm hoping for the market to go down, to be honest. I want Bitcoin to go at least to 35,000 or 30,000. So that's what I'm hoping actually. Uh, because after May, there is going to be a bull run. And before that, we just want to collect as many coins as we can. So in the bull run, we can all make at least 5 times or 10 times of our money, or maybe more than that. Who knows? Because there are coins who are just lying around at a flat surface right now. And if they starts pumping, then maybe you can get 100 times returns or what. There are coins like that also. But yeah, any question? If not, then of course we can end this session. In the next session, we will talk about RSI, which is a very important topic. Okay, we have to cover what? We have to cover RSI, MACD, stochastic RSI, volume, pattern trading. And if you want, and if we have some time in classes, then we can also homework, of course. Homework is basically just try to use support and resistance, Fibonacci, draw trend lines. I mean, whatever we have discussed till now, you can use it. Okay, use whatever we have discussed till now. Okay, that is your homework. But yeah, and of course, as I was saying, if we get some free time in the classes, then I will show you how to execute a proper trade by using Binance. Okay. Also, if you are interested, then we can also read about Elliott wave theory. Elliott wave theory. I mean, I don't use it that much, but of course, I can give you the basic understanding of it. I'm not a fan of Elliott wave theory, but there are people who just like to use that. So I can give you the basic understanding of Elliott wave theory, and then you can read more about it. Okay. But yeah. Homework is basically whatever you can do. Just try to analyze the market, support, resistance, trend line, moving averages, base breaking strategy, right? Market phases. Okay? Just do whatever you can do. We have covered almost 23 from point 1. We have to cover at least 5-6 more points, and this 28 point, which is pattern trading, it will take some time. It will take at least 1 or 2 classes. Okay, but yeah. Okay, guys. Thank you for joining. I hope you found this class informative little bit. Okay, today we discussed about Fibonacci extension and retracement in detail. Also, we revised a little bit about the base breaking strategy. So yeah, thanks for joining, everyone.